It's like a multiple choice. So you have the dollar sort of stopping its slide that we've seen. We have demand weakness. We have lower official selling prices from Saudi Arabia, which can indicate a weaker demand or just a regular old sell-off technical levels. What's leading oil down?
Oh, boy. All the above.
Or D, all of the above. Or E,
well,
none of the above.
The bottom line is the ebbing tide in the stock market. We all know that. The key thing is crude oil started tilting down a little bit early last week. And the key thing as a commodity strategist that really notices the pattern recognition was just bad. It went up to above 40. It's trickling there, and it just could not go any higher every time the stock market went higher. So it was a really good divergent sign of weakness. Now, WTI, I think, should go to near 40. And the probability of getting above, near 30, I mean, to stay above 40, it needs a higher stock market. It might not get that.
What is the shape of the curve telling us about future expectation in terms of demand and supply? It looks as if we're starting to get back into a position where things are looking quite stretched. Is the market beginning to price in the possibility that actually sort of post-Labor Day we're going to see demand, particularly in the United States, falling off?
Yeah, I appreciate you mentioning the curve because it's moved back towards contango. Contango is generally bad. It means a sign of excess supply in the market, Guy. And the market's just oversupplied. We know that it needs OPEC to cut. And it's been a little bit of time. Time decay is working against crude oil prices because OPEC needs money. Bloomberg had a great story a few weeks ago about Kuwait running low on cash, and they all just need money, and demand's really not coming back. And we had the initial V recovery, but I think it's going to more flatline. And the bottom line is, unless that stock market can really pull things higher, crude oil is going to stick with this bear market trend it's been in for quite a while.
So what's the relationship then, and we have to watch in terms of the dollar? Like if the dollar stabilizes here, we don't get that extra leg lower. What kind of headwind does that also put on oil?
It's almost a lose-lose because the stock market going down fast means you're somewhat strong. It's good for the dollar, strong dollar. It's bad for commodities, bad for copper. But that's why I see it somewhat of a lose-lose. We have to get past this period of mean reversion in the stock market. And right now, it's that tide pulling everything lower.
Mike, talking of the stock sell-off that we are seeing, everybody's trying to find out exactly what caused it, where was the catalyst, and some people pointed their finger towards Bitcoin rather than the kind of the call buying that we've seen that hit the brick wall. Was there any evidence? Was there any evidence in the price action last week? Bitcoin was certainly selling off. That may have caused a follow-on effect, particularly for Robinhood traders in the equity market.
I'm impressed sometimes how you know what I'm thinking, Guy, because the first thing I noticed...
You're always thinking Bitcoin.
Well, I am, but it started... The unique thing about it is it started in Ethereum. Ethereum got up to around 500. I'm like, this is way too expensive. Bitcoin around 12,000. This is getting a little bit expensive. And they started rolling over and the stock market fell. But it's all together right now. I mean, we're all in the same tide. The tide got way too high and just coming back a little. So the key thing I look at is, what if the S&P goes back to around 3,000? Doesn't mean a lot. That would mean a real lot for things like commodities. What I see is Bitcoin hovering and staying around 10,000 support, and even gold hovering and staying around 1,900 support. These quasi-currencies should come out ahead as we lower the tide in the equity market.